Good morning, everybody. Today is February 25th, 2020. It is Tuesday, and this is your stock market update for today and for the rest of the week, what you should do. Today the market opened 150 points up after a 1,000-point decline yesterday, and I was actually lucky enough to unload my stuff that I bought yesterday at the big drop, right at the end of the market, and I made some good money, but unfortunately I didn't unload everything but the majority of my positions. And today, when I saw the stock market was again declining, I actually did some intermediate trades, made some little money, 10-20%, because I trade stock options. And then I had my conference call with my clients and investors, and then while I had this conference call, I actually I saw the market declining even more, and also I saw alerts from CNBC. The market was going down like 150 points down, 200 points down, 250 points down. So since I didn't have time to pay attention to exactly the movements of the market, what I did was I actually placed some crazy low ball orders on Disney, on DIA, which is ETF that matches Dow Jones index, that is spelled as David Iron Apple. And I just was continuing with my phone call, which I kind of have daily almost. So then what happened is suddenly I saw that even my crazy low ass trades were going through, meaning that the market had like some sharp sell-offs. Obviously it was rebounding later on when I was leaving the house, but I love days like this. It's like when you trade the market, your head has to be cold and your nerves should be cool. You should not get affected by the sell panic. And if you decide to enter the market in small steps. Basically, right now we have most of our brokers charging 0 commission, which actually is much better for investors, small or large for that matter, because you enter the market with a small trade, and you see if you're correct or not. And for most of us, we're not God to predict the lowest point in the market. So usually what happens is that when you buy, the market goes a little bit more down from the price where you bought it. So what I do is if my order goes through, I almost immediately put an order which is 5, 10, 15, 20% lower than the current price at which I just bought something. And since I trade stock options, for stock options the volatility is much greater than for regular stocks. A stock that could go up and down by 1 or 2% actually makes its derivative, which is an option, to go up by 10, 20, 30% up or down. So it is not unusual to buy something at one price and then buy it later, I mean like 5 minutes later, at maybe 10 or 15 or 20% cheaper price. So, by the way, this is ginger beer, and it's alcohol free, but it's kind of tasty, and ginger is good for your stomach, I think. It also gives you some energy. So I just noticed that when I'm talking too much, my throat gets dry and I don't sound as as sexy as I would like to. So I'm just kidding, but you got the point. So the main thing is that today, when the market is going down by 100, 200, 300 points, you could put crazy ass trade, lowball your offers. Like for example with Disney, right? The call option is trading at $1.50. I look at it and I say, you know what? I'm gonna put an order at $1, which is 50% less. On most days, such trades would not go through, unless it's, for example, Friday when volatility is huge because the option is expiring that same day. But on Tuesday, that's a very rare opportunity. Suddenly I see my order goes through at $1, and it almost immediately bounces to $1.20, which is I'm making me up by 20%, but I'm not selling. I would like this volatility to continue to grab more profit from my trades. But my take on the market is this: the news, the media, they're trying to scare us, right? They try to raise their ratings. They want us to read the stupid news, go to the stupid websites and read all this crap, and then they want to cause some emotions in us, like fear or I don't know, anger or some kind of uncertainty. But what they don't understand is people who trade the stock market. You know what we really trade? We trade fear and greed. Okay? So when the market goes down, what drives the market? The fear. When we actually buy the market when it's going down, what do? We buy the fear. So when the market is going up, what happens is fear is gone. There's no fear anymore because everybody is kind of making money. But there's another feeling that kicks in. It's called greed. When suddenly people realize that, oh my God, I'm making a bunch of money very quickly. Now I'm getting greedy. I don't want to lose this money. I don't want to share this money with anybody else. So I enter a sell order and get out. So my advice for you is use this drop or this dip or this crash, whatever you call it, as your buying opportunity. We're going back up very soon, very quickly. If you would like to know which stocks to buy to play this stock market mini crash in your favor, I would recommend you to go to the website 2stx.com. It will take you to the Apple App Store where you could download, install, and run my app on your iPhone, iPad, and Apple TV. And it covers over 5,000 stocks and gives you advice what to buy and what to sell on a daily basis. Thank you for your time and good luck trading.